Hey guys, yeah, so this is the promised video that I told you I will send the link to the group. So this is Forex basics. That these are the things you guys have to understand in Forex before you guys even plan of trading. I get what I'm trying to say. A lot of people miss this process because they think it's not necessary, but it is actually very necessary. These are the foundation of Forex trading. Once you don't have them at the back of your mind, it is true you might be good in the analysis they're doing, which is your fundamental and technical, but you won't last in the market. So please, I want you guys to pay a very good attention to everything I'll be sharing in this class. So let's go. Good. So what we'll be looking at today, our table of contents is our table of contents. We'll be checking the introduction to Forex, fundamental analysis, technical analysis, and sentiment analysis. But before we start, how to start trading, there are three important steps you need to know. Number one, you need to familiarize yourself with trading strategies. What I mean by familiarize yourself with trading strategies is not just familiarizing yourself with my strategy alone. Always learn to go to YouTube and search for more. One thing I noticed about Forex is that Forex trading, it's like pieces. You know what I mean? Pieces, like they're like pieces. I can't tell you everything, sincerely speaking. I can't tell you everything. The only thing I can do for you is as my student, I can only try and share you my videos, everything I have on my system, because actually I have a lot of Forex content on my system. Maybe probably this time I should show you that. Let me try and see if I can show you that the kind of videos I have on my system, and you yourself can see. I have a folder for system itself, for Forex itself. If you guys can see that, you guys can see like a lot of videos, a lot of videos concerning Forex, a lot of videos, a lot of pictures, a lot of things that that I can just check on to anytime. This is not just the only one. These are videos. I think, yeah, these are videos. So then these also are videos. It's like these here. These are indicators. So this everything is videos. I still have them in my download. What is it now? There is no. So you guys are seeing that. You guys can see this. Almost everything here is about Forex. Almost everything here is about Forex. So you need to feed yourself. So the reason why I said accept my strategies, you need to familiarize with other people's strategy, is because Forex is like pieces. There are some things I won't remember to tell you. There are some things you'll be learning in another video. That's, for example, my strategy is the putting together of many pieces I found in many different videos. It's truly I paid a lot of money to some people to teach me Forex. Yes, they did, but they can't teach me everything. There's something that me myself I have to gain through experience and through my ready for what's it called? Being vast, my readiness to be vast. So you guys should familiarize with trading strategies. Go to YouTube, download a lot of videos on trading. You need to familiarize yourself with terminologies. If you don't understand, it's just like terminologies and language. Let me put those guys together. If you don't understand the language, the language out the outside people speak, and you're trying to live among them, you find living very hard. Same thing as Forex. You need to understand the terminology and language. You need to understand what the market is telling you in particular. And the education article about Forex market to understand the mechanism of the market. Yes, just as I've said, education article, which means like you must know how to interpret a Forex news. Yeah, you must know how to interpret the Forex news. You read, must learn how to read educational articles about Forex to actually understand how the market works. So all these things are put together. They're just like part of the body to help you understand the mechanism of the market. The second one is open a demo account first before working on a real trading account. It is entirely similar to real account. The only difference is that the money is not real. Just as I've explained in my first video, I think I said something like, okay, yeah, the first video I sent to you guys, which I was saying the creation of MT trader. Is it creation or how MT trader works? Yeah, you see that you guys are given an account which is around I think what's it now? Around maybe $100,000. Yeah, which wasn't a real money. It's just a money for you to practice. That's a demo account. You guys should try and work on that account first. So when you're now seeing that you're now profitable in the market, like you're constantly making profits, or you now understand how the market works, that is when you can now plan of putting your money investing in the market, and you can now plan of trading. But if you don't understand what the market is doing, because I will be teaching you will make Forex look very simple. Yeah, because that's how I roll. I make everything simple for myself. If you believe it's hard, it's hard. If you believe it's simple, it's simple. That's just how it works. So please, before you start anything on your forum, like on making money, that's the first mistake I did. While I was still learning, I put a lot of money in Forex. Then eventually I lose it. I lose the money. But now, because I've passed through the process, so you guys need to pass through the process by working on a demo account first. So when you're not profitable in your demo account, then you can now move to your real account. So now 3, you can now get on Forex, load your account. After completing the previous step, you can safely begin to trade. So let's move. So what is Forex? Forex is sort of foreign exchange, but the actual assets we are referring to is currencies. Foreign exchange is the art of exchanging one country currencies to another currency for a variety of reasons. This should be for a variety of reasons. Due to the act that the business is global, there is a need to transact with other. Sorry, that was a typographical error. There is a need to transact with other countries with their own particular currency. What's this trying to say? The word Forex is the short of foreign exchange. When I say foreign exchange, for example, now in Nigeria is having a product that they want to exchange, maybe probably with money or with another product with the United States of America. Believe me, this was how everything was being traded. Some like a long year ago. That's when you exchange trade by pattern. Yeah. But now there is currency. So if Nigeria is having a product, instead of US giving them a desirable product that Nigeria also wants, they rather give them money. How would they give them money? If you give dollars to Nigeria, it is very, very okay. But before you can actually spend that dollar in Nigeria, you have to change that dollar back to Naira. So that process is what they call foreign exchange. But at this one, we're not trading with pattern where they trade oil with probably food. No, we are trading with currency. This is when the other country is offering Nigeria money, but the money offered to Nigeria can't be traded because it is not the money that is accepted in this country. So they have to exchange that into Naira. Are you guys getting that? So due to this, you can see due to what's happening, you can see that each country is having its own particular money, and that money is valueless to people outside there unless it is exchanged. I will repeat again. Each country is having its own money, but that money is valueless unless it is exchanged with other countries' money. So with that, let me move on. So what is traded in Forex? The simple answer is money. What we'll be doing here is money. Because you are not buying anything physical, Trading forex can be confused sometimes. So what I mean here is this. What we will be doing, let me just explain what we will be doing for you. You know, GBP, for example, let me use the currency GBP USD. GBP USD, Great Britain pounds, and US dollars. What United States dollars? What we're actually doing is, for example, now, if I tell you that GBP buy GBP USD, I know you guys are not familiar with currency pair yet, but after you check the second video I'll be sending to you guys will understand what I mean. When I ask you guys to buy GBP USD, I'm actually trying to tell you that in the coming future, GBP will rise against USD. Are you guys getting me? I'm telling you in the coming future that GBP will rise against USD. What I'm just trying to tell you is this, like, due to my analysis, technical analysis or fundamental analysis, I'm seeing that if people will be exchanging GBP for US dollar, they will be doing it at a higher rate, more than the current rate it is now. Please, if you don't get this statement, should I say, please back it again and listen to it again. This is the reason why I love record this session, because you can listen to words again. What we are not buying anything physical. Actually, we are not getting the money. We are not going to any bank to buy GBP with our dollars. No, this thing is done on your phone. It is done via your broker. As we move on, maybe when I want to teach you guys how to open a live account, because I'll be sharing a video with that too, then I will understand the mechanism, how it actually works. What you're actually doing is you're buying a currency, though you don't have the money. For example, now, you don't have the money to buy like $10,000. You don't have the Nigerian money to buy. That's almost 5 million naira. You can't buy $10,000 actually. This is what the broker helps us to do. I will explain the meaning of broker. Broker is just a person standing between you and the market. Automatically, your money is too small. Even your $100,000 is too small to enter the market, because the amount of money we are talking about in the market is over $7 trillion. So your money can enter the market. So what the broker do is this: you send your money to your broker load the money to your account. So when you tell the broker that you want to buy GBP USD, what the broker do is this: the broker is giving you something on MT4 platform, in which I call lot size. I explained in the first video I sent to you guys. So this is the reason why you guys need to follow this class. I explained this. So, and I was saying something like, you have something they call lot size. That if you set your lot size to a very high standard, like if you are using $100 account, your lot size should be 0.01, because you are trying to tell the broker that you want to load a lot, you want them to help you get a lot of dollars, in which we increase your profit or increase your loss. Are you getting what I'm trying to say? If you're using a high lot size, or if you're using a low lot size, you're telling them that you want to get a minimum share of the market, in which it will not increase your profit. Your profit will move steadily, and your loss, if you're at loss, your loss will go on steadily. But we explain when we're doing a live trade. I'll be trading live with you guys during the day if some of you is available, and we'll record the section. And when you guys see it, you guys will understand what I'm trying to say. So let's just leave that for now. So we are not buying anything physical. So it is the broker that does that for us. It's the broker that helps us put our money in the market, though small. They help us add a lot of money to it. If you're dropping $100, believe me, the broker is adding almost like, should I say, $200,000 to your money, over $200,000 to your money, to help you get into the market. I will explain the mechanism how it works later, but just have it at the back of your mind that we are buying currencies and we are selling currencies. That's what we are doing here. It's not a game, it's not gambling. It's not gambling. So let's go. Think of buying a currency as buying a share in a particular country, like buying stock of a company. What is this trying to tell you is, when you're trading forex, just look at the currency as if you are buying a share in a particular country. So GBP USD, when I buy GBP USD, I'm trying to buy GBP currency in thinking that, okay, let me just explain like this. When GBP is at $1, please watch the next video I'll be sending to you guys. I'm repeating again for you to understand this. If GBP is at $1 and my analysis is telling me that GBP is going to rise to $1.3, what will I do? I will get a lot of GBP. So once I get a lot of GBP, once it reach $1.3, in which my technical analysis is telling me, fundamental analysis is telling me that it's going to get there, I will sell my GBP USD into dollars. I will have my money. That is the reason why we have our money in what? In dollars. Get that? If GBP is at $1 and my technical analysis is telling me that GBP is going to rise against dollar. I'm talking about GBP USD now. Everything goes for every other currency. I'm just using GBP USD as a case study. So I'm going to buy. I'm going to buy a lot of GBP. And what do you think? And I'm going to sell it when it gets to that price. So I'm in profit. The difference between my buying price and selling price is my profit, depending on my lot size. That's what we call pips in Forex. But you guys will understand that later once we start trading very well. This is just the fundamental that you guys have to understand. So if my analysis is also telling me that GBP is going to depreciate in the coming future, what am I going to do? I'm going to sell GBP like for dollars, because I believe that I should acquire more dollar to buy GBP when it's going to rise, I think. Do you get what I'm trying to say? So I'm going to place a sell on GBP USD. What do I mean by place a sell? That means I'm trying to sell GBP against dollar. So I'm going to sell GBP because my analysis is telling me that GBP is going to depreciate. So I'm going to sell it against dollar. Are you getting what I'm trying to say now? So you're not buying any of those. You're not buying that currency like for real. You're not selling them for real. But the broker is actually doing that for you. The broker, when you're buying, the broker is helping you to buy GBP. When you're selling, the broker is helping you to sell GBP. No, it is not for you. The money is not for you. But you're just like predicting what's happening in the market. So the broker is initiating your prediction in the market. So let's move. The price of the currency is usually a direct reflection of the market opinion on current and future health of its respective economy. So that was what I was saying in the earlier. I said if the economy of GBP, if the economy Great Britain, if it is good, and the economy of US is bad, automatically you will expect GBP to have a higher price than USD. Maybe probably GBP will rise against USD. But if USD is more, I mean the US, United States of America, if they're more good in economy than than the Great Britain, those that spend GBP, automatically you will see that the GBP will drop against USD, because now USD is now rising while GBP is dropping. Are you getting what I'm trying to say? Don't forget, we are trading, the quote pair is called GBP while the base is called USD. You understand this later on in the video. So in forex trading, when you buy, say, the Japanese yen, you are basically buying a share in Japanese economy. Yes. So that's just it. When you buy GBP USD, you're actually buying a share in GBP, saying that in the coming future, this share will increase. You are betting that the Japanese economy is doing well and will get better as time goes. Once you sell those shares back to the market, hopefully you will earn a profit. That was what I was explaining. You buy when you think it is going to be better, and you sell when you think it is going to drop. Do you get it? So in general, the exchange rate of a currency versus other currency is a reflection of the condition of the country's economy compared to other countries' economy. I think I've explained this earlier on. Let's move. So currency pair, I have a video on this that I made, so you guys will have to see it, and I will be sharing this after dropping this link. Just go, and I'll just be fast concerning these. And so what is a currency pair? A currency pair is the quotation of two different currencies. That is the reason we always have GBP USD EUR USD, we have GBP JPY. There are two different currencies spent in two different countries. So with the value of one currency being quoted against the other, the first listed currency of a currency pair is called the base currency. So I think you guys have to get this now. So now what this is trying to tell you is this. This is trying to say, sorry, please let me get my mouse and so that I can explain better. Yeah. So as I was saying, you know, if you notice something in your quote, that is, I'm not talking about of metal trader. If you notice something in your quote, you always find something like this there, something like this. You find something like G, B, B, U, S, D, and a lot of things like that. A, U, U, D, U, S, G, right? You will always find things like this there. So what are they trying to tell you now is this guy, these are two currencies, different currencies. These are two different currencies actually. So what are they trying to tell you? This guy is the base currency. This guy is the what? Is the quote currency. Are you guys getting that? They are currencies of two different countries. This one is spent in Great Britain. This one is spent in US. Are you getting that, guys? So let me delete that off. Let me delete that. Let's keep a clean chart. So let's keep a clean chart. So that's that concerning that. So we have different type of currencies. We have what we call major currency pair. What is major currency pair? A widely traded currency pair. A widely traded currency pair is euro against US dollar. Just follow me. Or as soon as euro US dollar. In fact, it is the most liquid currency pair in the world because it is the most heavily traded. It is the most heavily traded. So what are they trying to tell you is this: the most widely traded currency is euro. That's the euro, the pounds, the euro against US dollar. It is the most traded currency pair in the world because I think people believe these two currencies are very strong. The US dollar is the world power, so and the euro, you know, these guys, they are almost like, should I say, like the 7 countries are spending euro. Almost a bit over 7 countries, I think, are spending euro. So yeah, the currency is heavy, very, very heavy. So a lot of people are trading them every day. So it has the most liquid. It is the most liquid. What I mean by liquid is a lot of people are opening position, a lot of people are trying to buy, a lot of people are trying to sell. So the market is very, very crazy. So now listen, the quotation euro US dollar equals 1.2500. So this actually means that 1 euro is exchanged for 1.2500 US dollars. Let me explain to you. Here. I think let me move to somewhere here. Beautiful. Let me move to somewhere. So listen very well. Oh God, how can I do this? Okay, you guys we agree with me that actually that means there's this, what's it called now? Sorry, how will I do this? Okay, let me believe you guys will understand. So now you see this two line, this price. I mean the price here. If you open your MetaTrader, if you open your MetaTrader, you will see that there's currently a candle always forming at each price, and the price is changing almost every day, almost every time. So what is this trying to tell you? That this guy is trying to tell you that before, when the price was here, around this side, when the price was here, the current price, if you want to exchange 1 GBP for US dollar, you will be getting what? 1.31100. Do you get what I'm trying to say? When the price was here, if you're exchanging 1 GBP for US dollar, you'll be getting what? 1.31466. Do you get that? If you don't get that, please, then maybe probably I will make a video concerning that, or make a voice note concerning that, or a short one. I'll just explain more about that. But I think that should be enough for you guys to understand. So let's move on. So, okay, this means that 1 euro is exchanged for 1.2500 US dollars. In this case, euro is the base currency and USD is the what? Is the code currency, just as I've explained earlier, a counter currency. This means 1 euro is exchanged for $1.25. Other way of looking at this is that it will cost you $1.25 to buy, okay, $125 to buy 100 euro. Do you understand that? It is simple. Just if you want to buy 100 euros now. This, when one euro equals 1.25, if you are getting 100 euro, that would be what? 1.25 times 100, which will be in dollars. Are you getting what I'm trying to say now? So there are many currency pairs as there are currencies in the world. The total number of currency pairs that exist change as currency comes and go. All currency pairs are categorized according to the volume that is traded on a daily basis of pair. So now we categorize this currency pair to major and minor. We're having major and minor currency pairs according to the amount of volume, the amount of people trading that currency. You understand? The amount of people trading that currency every day. So currency pairs that are traded the most against the US dollar are referred to as the major currency pair. So what is this is trying to say? Major currency pair are most currency pairs that are traded against dollar. You know, dollar is a crazy. Almost every country is having a partnership with US. Almost every country in one way or the other. So almost US dollars is almost exchanged every day at almost every country. So it is very, 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 very voluminous. So let's move. So these currencies that I listed here are the major currency pair, like major currency pair that a lot of people are trading. I personally, I only trade one out of them, which is GBP USD, but you can trade as many as you want. The reason why I have my own personal reason of trading GBP USD. If you want to know, then you come and sow a seed. So let's move on. So the currency, okay, I refer to a major currency include Euro USD or Euro versus US dollar. USD JPY. So here now, USD is the what? Is the code currency, and JPY is what? Is the base currency. So, or dollar versus Japanese yen, GBP USD, or British pounds versus the dollar, USD CHF, the Swiss franc versus the dollar. This is supposed to be the dollar versus the Swiss franc, but let's just leave it that way. So AUD USD, Australian dollar versus the US dollar, USD CAD, Canadian dollars versus the US dollar. We have minor or exotic pairs. So for example now, Nigeria NGN, your Nigerian money USD, NGN USD. If you check on your chart, you'll find it NGN, yes, Nigerian money versus the US dollar. It's also a minor pair because how many people is trading Naira? Nobody's doing that for you. So we have different type of, so the mixture of different currencies, these guys are not just called major currency pair because they are actually coded with USD. They are called the major currency pair because a lot of people are actually trading them. A lot of people are actually doing what? Trading them. The volume is much. The amount of money put into those markets, they are much. In compared to maybe probably Euro, GBP,
GBP, JPY, Euro, CHF. Those guys, they are minor. There's no, I would say these currencies, they are not actually allowed, they might not be allowed to be traded in other countries. You understand what I'm trying to say? Do you get what I'm trying to say now? They may not be allowed to be traded in another country because their volume is low. Like you can trade them actually, like on your trader, but I mean exchange, like physical exchange. You understand what I'm trying to say? Unless maybe in that country itself. So which means if you want to trade euro for GBP, is that you are in Europe or you are in Great Britain? You understand? But if you want even in Great Britain or in Japanese, you can exchange euro for GBP. You can exchange USD for GBP. So these guys, they are widely accepted. So that is the meaning of that. So let's just read through. Currency pairs are not associated with the US dollars are referred to as minor currencies or cross. These pairs have slightly wider spread that and are not as liquid as the majors, but as sufficiently liquid market, nothing less. So what I mean by this spread, the half wider spread is this. Let me show you this. Can you guys see the gap between this 1.30633 and 1.30606? The gap between them, I mean this guy. The gap between them, this guy. See how small it is. This is very small because this is a what? This is a major currency pair. If it is, what's it called now? The minor, if it is the minor, you can be having one line here. This is the asking price, probably the asking price, and you're having the selling price here. So more on this when we start trading. When we start trading live accounts, like going live on our demo, you understand very well. So let's move to the class. Let's move to the class. And you really need to rush this thing down. So good. So that is just about that. So they're having a wider spread. So, and not a lot of people are trading them. If you read them, you can understand these pairs are not liquid and the spread are much wider. So you understand very well. And let's move. So moving to type of analysis. This is our major stuff. If you understand that, it's okay. If you don't understand, please drop your questions. But let's move to this. We have 3 types of Forex analysis. Listen very well. Please listen very well. A lot of people are making mistake here. Listen very well. We have fundamental analysis, we have technical analysis, and we have sentiment analysis. What is fundamental analysis? Fundamental analysis is a way of looking at the Forex market by analyzing economic, social, political force that may affect currency price. Let me just explain this as simple as it is. I said something concerning GBP USD. I said if GBP, the Great Britain that is spending GBP, that's Great Britain pounds. If the economy is good, we are expecting that in coming future that the Great Britain pounds will have more value to increase in price against the dollar. Do you get that? Good. Once you are getting that, that means we can go and study GBP economy and see if the economy is good or more better, or there's a news that pops up that shows that more investors are coming into Great Britain than US. If that is so, then we will be anticipating in the coming future that GBP will rise against what? USD. I don't know if you guys are getting this. So now, this is actually trying to tell you that I want to trade GBP USD. If I'm a fundamental analyst, what I will just do is this. I will go to news. I'll go and check what is actually happening in Great Britain. Do you get me now? What's actually happening in Great Britain? Or I should go and check their GDP, the gross domestic product, which means the total number of the total quality and should I say quality now? The total the gross product, the gross domestic product of GBP, which means the accumulative products produced in Great Britain versus the accumulative products produced in US. If I see that GBP economy is getting more better every day, for example, now their political, they are not having any crisis. And probably everybody is fine. No terrorism. Their unemployment rate is now getting low every day, every year. I mean, every time. You understand what I'm trying to say? Why the unemployment rate in US is rising every time? They are having terrorist issue. They're having a lot of things like that. So you can see that one economy is better than the other. So what are you trying to see? What are you trying to see there? You see that the one that the economy is better, the currency will actually improve more in price because a lot of people will be coming to that country to trade. A lot of people will be coming to that country to exchange other currencies for that money, other currencies for that currency. You understand what I'm trying to say? By that, it's giving strength to that GBP currency. In the other round, the US government, in which they are battling with terrorism, they are battling with political issue, unemployment, that kind of thing. You notice that a lot of investors, they won't come to US to exchange anything because they will be scared of their life. And so we use this fundamental analysis to know if one currency is actually strong against each other or one currency is weak against each other. Please, do you guys get that? So if you think about it, this makes a whole lot of sense. Just like in your economics, it is supply and demand that determines price. Oh God, I like the way I put that place. It is supply and demand that actually determines price. So now that means if the demand for GBP is very high based on their economy, trust me, for example, now just as we have, for example, now I have 10 barrels, I have 10 pen, and I have like 100 people waiting to buy that pen from me. Automatically, if the price of that pen is around, and now these people that want to buy that pen from me, they want to buy it in dollars. Are you getting me? If the current price of that pen is 20 naira, once I'm saying that 100 people are waiting, what will I do? I will increase the price to maybe, should I say $20? From the current price is $20, I will increase the price to maybe $100. You understand what I'm saying? That means the price of that pen is actually rising, right? Just where you have that pen, put GBP there. So now, GBP currency, when a lot of investors are coming into GBP economy to invest, automatically, let's just say a share in GBP currency is $20. Automatically, what will happen to that is that it will increase in price because the demand is high. Are you getting what I'm trying to say? But now, at the other hand, the one with a bad economy, you will notice that the supply of that currency will be much. And once the supply of that currency is much, it's just like you having thousands of biro, thousands of pen. Imagine, and they are like just two people that want to buy them. They will price them ridiculously. Yeah, that is the same thing that happens in currency pay. That is just the basics of fundamental analysis. So traders, investors look at economy that is better, that is good, that's favorable for them to make money, to profit from. They invest there. Once they're investing there, they are actually making that currency that currency strong. So in the other hand, if there's any base or the base currency or the quote currency now, if it's having a bad economy, investors won't go there. Whereas the supply of that bad economic currency will be much, while the demand will be low. But the one that with good currency, the demand will be high and the supply will be low. So what will happen to price? Price will shoot up. That is the basic of Forex fundamentals. If you think about it, okay, I think I've said that. Okay, or in our case, the currency exchange rate using supply and demand as an indicator where price could be heading is easy. The hard part is analyzing all of these factors that affect supply and demand. So just have these basics. I'm not going to teach fundamental in this class. Those that really want to understand more about fundamentals, we have to upgrade themselves to my other class. I'll be having an advanced class after this class for those that can pay. Actually, yes, for those that can pay. I'm going to have an advanced class. This is just for you guys to understand the basics about knowledge about Forex, and me showing you my strategy. And you guys, if you want to feed yourself, don't feed yourself. So the factors that affect supply and demand. So how the hard part is analyzing economic factor, social factor, political force that affect currency. So that is the hard part of this one. This is actually very interesting. So in other words, you have to look at different factors to determine whose economy is rocking, like a Blackpink song, and whose economy is sucking. So those economy sucks. So you have to understand the reason why and how certain events like an increase in unemployment rate affect the country's economy and monetary policy, which ultimately affect the level of demand of that currency. I think I explained that. The idea behind this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen. The better shape a country economy is, the more foreign businesses and investors will invest. I think I've explained this. Invest in that country. This results in the need to purchase that country's currency to obtain those assets. Wow, I think I explained this. So let me just jump. Okay, for example, let's say the US dollar has gained strength because US dollar economy is improving. As the economy gets better, the rising interest rates may be leading to, I told you that things, they will start raising their interest rate because a lot of investors are now coming, so they want to make more money. So may be needed to control growth and inflation. Higher interest rates make dollar-dominated financial assets more attractive. So let's just move. In order to get their hands on those lovely assets, traders and investors have to come and buy dollar first, US dollar first. This increases the demand for the currency. Beautiful. If you read this, it is very, very self-explanatory. So, this is where we are going. This is the this is the most interesting part of Forex, which I really need you guys to pay focus on. So now, what is technical analysis? Technical analysis is the framework in which traders study price movement. This is the framework in which, that means, so before, there are a lot of people that are saying, if you are a technical analyst, you don't need fundamentals to trade. If you are a fundamental analyst, you don't need technical to trade. It's a lie. We all work hand in hand, actually. And in fact, the more you are good in analyzing fundamental, the more money you make, because you can tell where this price is actually heading to. The more you are good in technical analysis, the more profitable you are at your current movement. Yeah, that's the word. So those guys, they work hand in hand. You understand what I'm trying to say now? So good. Let me continue. I will explain something. I'll go to my chart version and I'll explain something to you guys. So the theory is that a person can look at this historical price movement and determine the current trading condition and potential price movement. So what technical analysis is just trying to do is this. Okay, let me just go to my chart and let me show you something, what I'm actually trying to say. Let me see. Okay, good. Okay, this is my own chart. Sorry, let me use this. This is my own chart now. This is my own chart. Good. Okay, this is very beautiful. Okay, let me just use this place as a case study. Notice something. Notice what I did here. Actually, you guys, if you guys check my status, you guys can see something. I took this trade and I won this trade over, so let's say over $400. Yeah, I won over $400 in this trade. So see where I marked here. Earlier, before this market got to this side, I marked this place. And once you get into real technical analysis, you guys will understand what I did actually. But I just want to look at this. So what I'm seeing is that this is an historical price. Okay, see, I've marked on that position again. See, I've marked this side again. As you guys can see, I've marked this side again. And I'll be marking even this side. What's it called? Okay, I'll be marking even this side now. This side now. Yeah, beautiful. So can you see what happened here? The market hits this side. This is actually the future. I don't know what's going to happen, but I'm trying to predict the market, where the market is going. I'm trying to predict where the market is going. Are you getting what I'm trying to say? I'm trying to predict where the market is going based on what has happened in history. This is history actually. This guy, they're actually histories. They actually is what has happened. But I'm trying to predict what the market will be doing. Are you getting what I'm trying to say? I'm trying to predict what the market will be doing in the future. So I'll still tell you how they work. So believe me, when the price got to this line here, the price bounced down. The price ranges because of the Easter period. When the price goes to this line here, the price bounced down again. So what am I trying to wait for in this market? So I'm trying to see if probably in the future, maybe price is going to probably come down, I don't know, and come to this line again. Once this price touch this line again, I'm expecting a bounce down. Because of what? It has been happening. It happened there. So I'm expecting it should happen again. So based on that, I can say what I've just done is what they call technical analysis, using of mathematical calculation to see what the market can probably do in the nearest future. Please, do you guys get that? So let's just continue. The more we go on, you understand. So someone who use technical analysis is called a technical analyst. Traders who use technical analysis are known as technical traders. For example, me, I'm a technical trader. Do I do a little bit of fundamental sometimes? The main evidence of using technical analysis is that theoretically, all current market information is reflected in what? In price. So what they mean by that is this. See this guy. This is GBP USD. This is GBP USD. Let me try and zoom it out. So if you guys are seeing this, you guys will see that this market has been going down. This market has actually been going down, like down. It has been doing this. It has been doing this. Right? The market has been going down, which means GBP is falling against USD. The USD economy is growing stronger, while GBP economy is going weaker, according to our fundamentals. This is what is actually saying. But as a technical analyst, we look at what is actually happening in the market. We are not just telling you the direction of the market. We're actually looking at what is actually going on in the market mathematically. Please, do you get that? That is what we are doing as technical analysts. Let's go back to our class. So technical traders generally ascribe to the belief that it is all in the chart. So they believe that I'm not concerned about fundamentals. I don't need to read any news. What I just want to go to is look at my chart. I'll know what is going on. If one economy is good and one economy is bad, it will reflect on my chart. It is true, actually. It is very, very, very true. But you actually need to know fundamentals to know where the market is going in the nearest future. So this simply means that all non-fundamental information is priced into the current market price. If price reflects all the information that is out there, then price action is all one would really need to make a trade. Yes, that's very correct. What you just need is to study price action. You actually get a trade. So technical analysis looks at the reading, flow, and trend in price action. So this will lead us to our next class, in which I'll be discussing about market trend. So we have a different type of trends, and that's what we'll be doing in our next class. So I'll be posting the date of our next class. Then probably I should be recording the videos and sending, because of, or if it's possible for me to have a very good service, or you guys have a very good service, then I'll tell you guys, then you guys will, you guys will just join me in the stuff. Hello. So let's continue. So what I drew here was actually, this place was actually a trend. This is a downtrend. You guys understand as we proceed in the class. So let's just do this fast to keep the videos not to be too long, not to be too unnecessarily long. So let's go. So okay, let's move to the next slide. So now you have had the old adage, history tends to repeat itself. So let's go back to my chart. I wish I can just split my screen now. You can see. So I said it here that the price touched this side, the price touched this side, the price dropped. The price touched this side, the price dropped. Let me widen my. So the price touched this side, the price dropped. The price touched this side, the price dropped. I'm expecting whenever this price comes to touch this side again, it is history. Something keep dropping this market here. So it drops the market here. It is history. Once the market comes to touch this price, I'm expecting this price should do what? Should drop. So this is just what history tends to repeat itself. What dropped this market here is what that dropped this market here. Is what that will drop this market here if this market won't break out. Yes. So that is what we do as technical analysts. We predict the market using mathematical calculation, and with the belief of history will always repeat itself. So well, that is basically what technical analysis is all about. So if a certain price held as a major support or resistance level in the past, traders will keep an eye out for it and base their trade around the historical price. So let me just do this as an example. So sorry. Okay, see, for example, see this line. This is a line. So a price is coming, the price hits this guy, the price bounced up. So what traders will do is this: they will start looking at this line, believing that whatever that bounced this market up at here, if this market comes back to this place, it will surely bounce the market up again. So what they'll be doing is they'll be waiting here, they'll be waiting at this line for what? To take their buy position, to buy around this side. I get what I'm trying to say. So they are trying to history repeat itself. So let's keep moving. Let's keep moving. So so that's what this piece is just trying to say. Support or resistance. We will learn that in our coming class. That's our next class, actually. That's our next class. Technical analysts look for familiar patterns, that will form in the past or will form trades idea, believing price could probably act the same way it did before. I've explained that. Technical analysis is not so much about prediction, beautiful. It's about probability. This is what I want to clarify in people. Forex is not prediction. You're not playing bet Ninja. You're not playing Ninja bets. You're not playing X bets. This thing is about probability. If the probability is high that this market is going to turn at this area of reverse or continue going at that particular trend, you take the trade. It's not prediction, it is probability. Technical analysis is the study of historical price action in order to identify patterns and determine probability of future direction of price. So how the heck does one study historical price action? In the world of trading, when someone says technical analysis, the first thing that comes to mind is a chart. Technical analysts use charts because they are the easiest way to visualize historical data. As technical analysts, once we live, we eat, we breathe charts. That is why we are often called chartists. So me as a person, I live in charts, actually. I live in charts. Before starting this video with you guys, I've analyzed what I'm looking for. I've analyzed what I'm looking at today, like what I'm explaining today. I've already seen it, so I'm just waiting for it to happen and I take my trade. So that's what is going. I think that's everything about that. So we study historical price action, what has happened in the past to predict what's going to happen in the future. So let's keep moving. Let's keep moving. So you can look at past data to help you spot trends and pattern, which could help you find some great trade opportunities. What is more is that with all the traders who rely on technical analysis out there, these price pattern indicators signals tend to become self-fulfilling. That's true. The more you guys are moving this class with me, you guys will understand that it is very, very interesting. As more and more forex traders look for certain price level and chart pattern, the more likely those patterns will manifest themselves in the market. You should know though that technical analysis is very subjective. It is subjective to what? To fundamental analysis, because fundamental is actually what determines where the market is going in the long run. Why technical analysis reveals to you what the market is currently doing. I think that is fulfilling. So what is sentiment analysis? Let me just tell you what sentiment analysis is. Sentiment analysis is actually the way other traders feel. Maybe for example now, yeah, this is my stuff here. Remember that I told you that when market is coming from this side, when it gets to this side, traders will wait here, and when it gets to this side and bounce up, traders will be waiting at this level, at this line, right? At this line, for the market to come and bounce down, for them to take position, which means the sentiment analysis for this market is a lot of people will be trading this line. So which gives this guy a more high probability of holding, because you are not just the only one that is looking at this market now. A lot of traders are looking at this market everywhere in the world. So there's something they call smart money concept actually. That smart money concept is for advanced trader, and I'll be teaching those that will be upgrading themselves, because you can also find out that as you guys are also looking at this place, the big banks with huge money are also looking at this place to take their position. And those guys are with more money than you guys. So what they will do is they will just tap into this place and move, taking away your stop losses. And don't worry, as we produce it in the market, you understand better. So let's just keep going. So sentiment analysis is used to gauge how other traders feel, whether it's about the overall current market or about a particular currency pair. You understand what I'm trying to say now? How people are feeling about that currency pair. Maybe the people are feeling that this market is good, this market should buy, this market should sell. You should know how to analyze that. Earlier, we said that price action, it should theoretically reflect all available market information. Unfortunately for us forex traders, it is not that simple. That's correct. The forex market do not simply reflect all the information out there, because traders will all just act the same way. Of course, that isn't how things work. This is why sentiment analysis is important. Each trader has his own opinion of why the market is acting the way it does, whether to trade in the same direction of the market or go against it. The market is just like Facebook. It's a complex network made up of individuals who want to spam our news feed. So what this page is just trying to say is, you as a trader, if you are a trader or you want to become a trader, believe me, everybody won't think the way you are thinking. If you are seeing a buy, someone else is seeing a sell. Yeah. If you are seeing a ranging market, someone is actually seeing a trending market. So people are seeing different things at different places at different times. So just get that at the back of your mind. And once you get that at the back of your mind, so you should know how to analyze that. You should know how to analyze that market based on that sentiment. So, for example, now if GBP news comes out now and the news is favorable to GBP economy, believe me, that currency should rise, right? But according to technical analysis, we are seeing that this currency is falling and it will fall. What will happen? You'll be having a lot of bias in the market. Some people will be buying, some people will be selling. So the market will be confused. So you as a trader, if you are not well grounded, or you'll be confused, or you'll be even lost in the market. So let's move to the next slide. So that's just everything it's talking about there. Okay, beautiful. I think, okay, let's go. Kidding aside, the market basically represents what all traders, you, Warren Buffett, or Clean from the donut shop feel about the market. Yes, that is just it. The market represents what all of you are doing. That's the reason why we use candlestick. You understand the reason why we use candlestick now. So don't worry, we'll be doing trends. After trends, we'll be doing candlesticks. And everything we are doing it this week. Everything we're doing. So by next week, we'll move into real chart analysis. So don't worry, we'll get that. Each trader thought and opinion, which I express through whatever position they take, helps form the overall sentiment of the market, regardless of what information is out there. So I think that is self-explanatory. So whatever position you are taking, maybe you are buying, you are selling, it steps to form the overall feeling, overall expression of what the market is doing, regardless of whatever maybe news that is out there, what you're actually doing now. You understand? The problem is that as retail trader, no matter how strong you feel about a certain trade, you cannot move the forex market in your favor. That was what I was trying to explain to you. When I was trying to explain to you that your money is too small. Your money is oh god, your money is very very small, like very 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 small. So for you to move the forex market, can you imagine your money? Your money is just like 0.0000000% of the amount of money in forex market. So imagine what can you do? I mean 0. Like 100 zeros, like 100 zeros. So imagine, so you can't move the market. You can only feel that this market will move this certain way, and checking your confirmation. If you see it is moving, then you can join. If you see it's not moving, then don't join. I will explain that later in the stuff. So, but remember that you can't move the forex. You can't force the forex market to your favor. You cannot do that. You can only check the rate of percentage, the rate of percentage probability in which this market moves. So even if you believe that dollar is going to go up, but everyone else is bearish on it, so you are predicting that dollar, according to news, dollar is going to go up, so I want to buy dollar. No, you can't do that. What if everyone else is going short on it? Everybody is bearish on it. What will you do? Yeah, so there is nothing much you can do about it unless you are one of the GS, George Soros and Goldman Sachs. So these George Soros are people with billions of dollars to move the forex market. So these guys can move markets anytime they want because they are gurus. God, these guys are rich too. So as a trader, you have to take all this into consideration. You need to perform sentiment analysis, not just sentiment analysis, your fundamental analysis, your technical analysis, your sentiment analysis. It is time for you to gauge how the market is feeling, whether it is bullish or bearish. So let me just explain the term bullish or bearish. Bullish simply means the market is going up. Bull, the market is going up, from the word bull. The market is going up. While bearish means the market is going down. Do you get that? Bullish means the market is going up, while bearish means the market is going down. So the summary of everything I said, I explained forex trading. Forex trading is an exchange between two countries in which the basics of exchange is their currency. So I think that's that about forex. So I explained fundamental analysis. Now I explained currency pair, but I have a video on currency pair in which I'll be sharing the link in the group very soon. So and I explained what was now fundamental analysis, how you read countries' economy through their political, their social, and their what's it called now, and their their GDP. Those ones, how you read them to determine the future direction the market is going. I explained technical analysis, how we use the historical data in the market to know where the market is actually heading to in the coming future. Do you get that? So then I explain sentiment analysis, in which you analyze how traders are feeling about the market. You don't just enter a market because you feel like you need to enter the market. You enter the market because the market is actually showing you that this is where it is going, it is heading to. You get that? So I believe you guys understand this video. Any question, please direct it into my DM straight up. Just direct into my DM straight up. If it requires me answering you privately, I will answer you privately. If it requires me answering on the group, I will answer on the group. Please, you guys, you have a wonderful day ahead. and you guys, we'll see in the next class. I will update you guys. We'll be having our next class. But that our next class should be on Zoom because it will be on trends, on market trends. So let's I think we should share the the grace. Okay, now you guys have a wonderful time. Bye.